Hello everyone. In this video we will see will interest rates drop soon in the US. Welcome to the question answer channel. The channel where you will find the answer to everything. Thanks to Peter Armstrong, Bob MacKenzie, Roger Lignugaris and Paul Sutton for sharing their views on this question. Let's go for Peter Armstrong's first answer.
Well, I don't think the interest rate will ever get to even 5%. It's likely to go down again to near zero. They simply can't raise the interest rate or the entire system collapses as they won't be able to service the debt. In fact, right now with the interest rate at a very low 2.5%, they can't even service the debt. The way I see it is inevitable. It's going to end in hyperinflation and the destruction of the USD.
We can continue with Bob MacKenzie's answer.
If rates go negative, it will force savers to put their money at risk. It will very likely cause some of that money to leave the US to other economies that will open up and are now opening up to accept some of that money from the US and Europe. A good deal of money is already moving into other countries that need development and show strength in resources. If the US rates go negative, you can bet other countries that do not need. Access this answer and support the author as a Quora Plus subscriber. Access all answers reserved by Bob MacKenzie. For Quora Plus subscribers, access exclusive answers from thousands more participating creators in Quora Plus. Browse ad-free and support creators. Start free trial. Learn more.
What do you think? We will continue with Roger Lignugaris' answer.
The chances of negative interest rates in the US is zero. Negative interest rates happen only under very limited circumstances, like in Germany, which has a steadily decreasing amount of sovereign debt and at the same time requires banks to buy that debt. So they bid the price up because they have to buy those bonds and in the process reduce the yield on the bonds to zero or lower. We don't have that shortage of bonds issue in the US and probably never will. Nor are US banks required to buy US government debt. The Federal Reserve would step in long before interest rates got too low. It's a special circumstances issue we don't face here.
We continue with Paul Sutton's answer.
The public is confused on interest rates. They confuse the interest rate the Fed sets with the interest paid on US Treasuries. The Fed sets the interest rate, a 0.25% range. In actuality, that Fed member banks are allowed to charge one another on overnight loans between themselves. Interest rates on Treasuries are set by the Treasury market, an open, secondary market just like the stock market, except that they trade Treasuries instead of stocks. The Treasury market trades about $0.5 trillion worth of Treasuries each trading day, and the so-called black pools, which are where large institutions trade among themselves, trade perhaps an equal amount. Because Treasuries have fixed face values, that is, the amount they will be redeemable for upon maturity, when their price fluctuates, so too does their yield, only in the opposite direction. Price up, yield down, in other words, and price down, yield up. When Treasuries are in demand, the rule of supply and demand suggests that therefore you'd expect their price to go up. And hence, their yield down. With enough demand for Treasuries, price could go much higher, and thus, yield much lower. But if that happens, it will be because market forces have created that situation, and not, I repeat, not, because the Fed has any hand in it. The current decline in interest rates, yield, is because the stock market has been net stagnant for the past 18 months, and advanced indications are that a recession might happen in 2020. The market phrase is, the smart money is seeking a safe refuge, explaining the interest in bonds and Treasuries. But, the real, serious money was made while bond prices were rising, capital gains, rather than buying to hold, their price rising 30% since last November, 2018. Could rates go to zero or even lower? Yes, if enough people want to own bonds, their price will rise, and their yield will fall. That far, nobody knows for sure, but anything in the current economic environment is possible.
This is the end of the video. I hope you have more answers. Thank you for watching this video. If you like it more, you can subscribe and leave a like on this video. The video is over. You can continue discussing this question in the comments, or find another question that interests you. See you next time.